Hello, everyone. So the time in between February OPEX and March OPEX, which is when options expire, tends to be extremely choppy. Generally, it tends to also be bearish. So as you can see, according to the February seasonality chart for the S&P 500, towards the end of February, things tend to become very bearish. We get a bit of a pullback. And then into the end of March, throughout this entire period, things are choppy. So it's going to be very interesting to see what happens over the next coming weeks. It's also interesting to see that during the entire month of March, it's Ramadan, which means that Muslims are not allowed to eat or drink during the day at all, from an hour or so before sunrise to sunset. So it's going to be pretty interesting to see where all the oil money and all these other oil conglomerate and the people in the Middle East, how that trading goes for them. But purely based off of what we see right now especially right now, what we see based off of OPEX, right? Let me put up a chart. So we just had options expiration. The VIX things are falling, right? The VIX is rising. And this is generally really difficult. This is a difficult situation for the overall market. This is not the most healthy spot. But we're going to take a look at essentially what the levels that need to hold are. Now, what I want to first show is the VIX, okay? So the VIX is very important because it has an inverse relationship to the market, okay? It's very important. Very simple. When the VIX is rising, the overall market tends to fall. Very simple. Right now, what we're seeing is the VIX is not yet extremely overextended to the upside, according to the Bollinger Bands. There's still more room to go. For example, in the past, we did get a bit of a hint outside of the upper levels. We would get a pullback, and then it would continue chopping around and rising afterward. This could end up happening in this situation, but just from the immediate price action, the VIX can continue still pushing upwards into the upper bands. So once again, if the VIX is rising, then that's generally bearish for the overall market. So one interesting thing, though, that is occurring in the market right now is that the IWM is trading outside of the lower level of the Bollinger Band. We're going to talk about the Bollinger Band a lot. The reason why the Bollinger Band is so important is because it calculates how far away from the mean line price actually is. So when we're trading outside of the lower level of the Bollinger Band, as the Bollinger Band continues to fall, the price wants to revert back into the mean. It wants to revert back into the Bollinger Band. So right now you could see when a large, very large tech stock or an ETF, things of that nature, are trading outside of the lower level of the Bollinger Band, it tends to become a bit of a safer, long opportunity. When things are trading outside of the upper level of the Bollinger Band, it's not as safe to just go short. It does become a bit easier to go long when we're showing weakness outside of the lower level of the Bollinger Band. The IWM, watching the IWM is important because the IWM affects the overall market. If the IWM starts showing strength, that strength can start permeating into the S&P 500. Very simple. So if we're looking at the IWM, for example, and we're seeing, okay, it's very overextended to the downside, maybe it could have another day or two of weakness. We could maybe come back down to around 210, 212, find some sort of support over here and bounce. That is generally going to be bullish for the S&P 500 once we bounce as well. So keep that in mind. It's very important that the IWM is getting overextended to the downside. So this is a daily chart of the QQQ. Obviously, we are not overextended to the downside according to the Bollinger Bands as we are on the IWM. But the NASDAQ is taking a bit of a hit. It's actually very, once again, it's very beautifully trading around these trend lines. Almost too perfectly. So remember a few days ago, I was showing how essentially this wick, right? I was showing how this wick was extremely basically, I was showing how this wick was extremely, extremely bearish, right? It was tough to be bullish. It was tough to be bearish on the NASDAQ, right? And I would hate to be either like long up here, right? What ended up happening was clearly we closed below both of these uptrend levels on that Friday. And now today, what ended up happening? What ended up happening almost to the exact cent? We wicked to this trend line again right here. We wicked to it almost perfectly, and then we reversed back down. So this is really, it just looks really, really manipulated. Not only did we get a perfect wick over here, we got a perfect wick to the downside on Thursday. This is really, really weird, interesting sort of price action. And it's interesting because not all of the NASDAQ stocks are showing a lot of weakness. Some of them are getting to points where we could get a bit of a bottom, but this is really interesting price action, especially post OPEX when things are deliberately getting manipulated. It's going to be interesting to see how much lower price has to go. Honestly, we have major support around 513, 514. Really just down here in this zone right here. And if we tumble a bit lower, this is generally where you would want to go long, in my opinion. Going long a bit here is a bit aggressive. Yes, it could work on the NASDAQ. We could get a bit of a bounce. I personally would not want to, because this would be a bit of a really, really aggressive long opportunity. If this is like a brand new trade, this would be a relatively aggressive, but this could also still work. We are at a major fib level as well at the 38.2% fib at 520. 520 is just psychologically a very important level. But the safest, the absolute safest trade, much more safer trade, would be wait for this next leg down. That would put the IWM at an extremely oversold point. This would put the NASDAQ at an extremely oversold point as well after multiple red days. And you just have to look at it from this perspective. Where would people want to cover their shorts? So yes, you went short up here. Where would the people going short up here want to take profit? Down here. So if we could get another move to the downside, this would be the first instance of where people would want to take some profits, and they would have to go long if they want to take profits on their shorts, right? Because they need to cover. So if the shorts take profit down here, price will end up bouncing. And then from here, once we bounce back up to around 518, 520, then the market is going to have to make a very serious decision. Is this bounce actually a real bounce? Or is this going to repeat for another move to the downside due to the SPX seasonality for March? Because we know that into the end of February, even into just the middle of March, things tend to be bearish. So it's going to be interesting. It's going to be very, very interesting. But this is my thought process. I would not want to, just in general, this is not really the time to be aggressively short. That's the main thing. You don't want to be aggressively short here. These are better opportunities to go long. I wouldn't even be surprised if going long down here at the close ended up working. But the safest spots to go long, in my opinion, would end up just being 512, 514 area on the NASDAQ. All right, so let's look at the SPY. So basically, the S&P is showing that there is a bit more room to the downside, but this 596, 595.50 area is very, very important support. We were just looking at how the IWM was trading outside of the lower level of the Bollinger Band, right? When you are trading outside of the lower level, right, this tends to be a good opportunity for a bounce in the market. If we get a bounce in the IWM, or if the IWM drifts a bit lower and bounces a bit lower, right, and starts to bounce from the lower point, that strength in the IWM will permeate into the S&P. So we have support here at 596. Spectacular. But then if the IWM starts to make another low, the SPY can go to around 588 pretty easily. So if this level doesn't really hold, then the SPY can head down to 588 to 590 area. And that would cause the SPY to be much more aggressively overshot and overcooked to the downside. You don't want to go short at levels of support after a major move to the downside already occurs. Does that make sense? What you want to look at in the market is where would longs, or where in this situation, right? If you were to go short up here, where would shorts want to take profit on their shorts? They would take profits at levels of support. So the first one would be around this, literally at 596. Below 596, it would be 592. Below 592, 588. So these are the places where we need to see if the market is going to be able to get a bit of a bounce. And if it doesn't, I would be pretty shocked, actually. But once again, you know, the time between March and February OPEX tends to be very, very bearish. Especially, we just saw the SP 500 seasonality. This does start to beget certain questions. How much more lower can the market go? I wouldn't be surprised if we do get a bit lower. And that's really that. You know, these are the levels of support. We could take a look at the large tech stocks very, very simply to just really, really drive it home. Tesla is holding this low here. This could easily make another low, but regardless, you know, Tesla is trying to bottom itself out here. Apple is making new highs. It's getting to levels of resistance, but it's trying to make new highs. So it's very interesting. Apple is not doing terribly. Microsoft made a bit of a low. It's trying to hold. Even again, I mean, this is just normal support. This is just normal area for Microsoft to really hold. This 402 area. This is nothing like, this is not a crazy move to the downside for Microsoft. We've already been holding at this level of support for so long. Obviously, the move to the downside afterward is not going to be huge. Same concept for Google. If we've been consolidating for a very long time, that's why the move to the downside is so stunted, because we've already been basically holding this level of support. It's not going to just start cracking down lower. You know, these are Microsoft and Google. I would be pretty shocked to see if there's more room to the downside. Does that make sense? But whereas Netflix, for example, Netflix is getting some more aggressive moves to the downside because we were into strength, and getting a bit of a move to the downside is normal, right? It's normal. Meta, same concept. Same concept with Meta, you know? Bit of a downside move is more normal on these stocks that are already showing a lot of strength. So, once again, these stocks, yeah, they have a bit more room to go to the downside, but these are all, in my opinion, like, you just have to look for opportunities to go long. NVIDIA, is it really crazy that NVIDIA had like a huge red day after bouncing tremendously from the lows? From 17% down, we bounced. How much did we bounce? We dropped 17%, and then we bounced 24% in almost 2 weeks. So is a bit of a downward move that alarming? Not really, because this is already, things are moving very quickly. Does that make sense? So it's like, just don't automatically think like, oh my God, wow, the market is going to start falling. That's it. We're going to see 550 on the SPY. Oh my goodness. You know, calm down, in my opinion. How much of a move to the downside was this from the high so far? Probably only 2.5%. Where would we be if we get to, you know, we could see 550. I don't see why not. That would only be a 10% drop. But do I think it'll happen? Probably not. Probably not. But it is what it is. It'll be fun if it does happen, to be honest. We'll make a lot of money regardless. But just keep that in mind. We just have to continue watching the VIX, the large tech stocks, and really the IWM the NASDAQ and the SPY. If we continue doing that, it should be interesting. It should be interesting. But for now, this is a pretty interesting spot for the overall market. I'm looking for dips instead of trying to go short into this weakness. All right. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you. Have a good one.